Hello and welcome to another one of our webinars in the series. We're going to be talking about the gas crisis today, which pretty topical subject matter. Thank you very much for joining again. My name is Matt Brown and I'm Vice President in Management Consulting Division looking after energy, and I've been working 30 or so years nearly now on the energy transition, although we didn't call it that probably 30 years ago. So if we skip on through, thank you, Lucy, to there we are, the presenters. I'm very pleased to say we have with us my colleague Lucy, who is an expert in gas markets and will be taking us through, and I'll be doing my best to ask some questions along the way. I was reflecting, Lucy, we've been working together for a long time, and before you introduce yourself, I was reflecting on the fact that if we work in the future for as long as we've worked in the past, it will very nearly be 2050 by the time that would be. So since 1996, I think we've been working.
Thank you, Matt.
Yeah. You're welcome. So please introduce yourself.
Well, I've been doing this, as Matt pointed out kindly, for nearly 26 years. I started off working looking at the UK gas market, and then worked on the then brand new interconnector with Europe. So, and I've since then modeled the European markets and worked around the world in various global markets, US, and we've got offices in Beijing and Bangkok, who I've worked with quite frequently now.
Wonderful. So just some housekeeping. Please ask questions as we go along. We'll do our best to pick those up. We've also got a bunch of questions from the registration. Thank you very much for those. We'll have a look at some of those as well. Some as we go along and some at the end. Side pack recording as usual available to everyone. This is a series of webinars, so you can look on our on the website and look back since we started this webinar series and see what's there. And also I would recommend the AFRY Management Consulting podcast on the energy transition to you. If you haven't heard it, please do have a listen. And I think with that, I will hand over to you, Lucy, to get us going. Thank you.
Okay, so I've split this into three sections. Firstly, to look at the situation that we're in and have been during this year, and then to look at some of the commentary that people have said, the reasons for the situation we're in, and then I've moved on to some of the outlook. I'll try and answer some of the questions that have already been asked throughout, and then Matt may read some of the questions that if you type any in during the webinar. There are already quite a lot of questions, so if I answer all of them, we may not get through it in the hour. So the first thing I decided to look at was a little bit of history. In the last 4 years, European gas prices have principally been driven by supply and demand. So, and there are a few examples where supply and demand have gone out of kilter. So back at the beginning of 2018, there was the beast from the east, which was a very late, very cold spell. So there was high demand across Russia and in Europe, and it fell at the end of the winter. So when storage was quite depleted and prices went very high for a little while. Then there was a very mild winter the next year. And as you can see, prices just moved down throughout 2019 following that mild winter. And then the LNG started to come on from the US. So there was an LNG glut. More LNG came in, and that was rapidly followed by COVID-19 in March 2020, and demand fell even lower, so prices got even lower. Then we come to the beginning of 2021, and we had another colder winter, and you can see that prices just tipped up a little bit there at the beginning of 21. During 2021, there have been numerous global supply and demand issues. So altogether, the global market has been moving upwards throughout the year. There was a heat wave that hit China, Japan, and South Korea, and they used gas in power. so they were using a lot more gas, and these countries are all supplied by LNG, so there was a high demand for LNG. South Korea also had some nuclear outages, which increased its demand more. There was a drought in Brazil, and when there isn't enough hydropower generation in Brazil, they turn to LNG for their electricity generation. As it happened, the recovery from COVID way back when it was just Delta was actually quite quick in China. So the economic recovery came quite quickly and demand picked up quite quickly. And then from around September time, it became noticeable that there was less Russian gas than there would normally be delivered to the pipelines to Europe. And that became a problem in around September. As well as all these other things, even US storage, they have a lot of gas storage in the US, and even US storage was low. And this was in part a roll on from the COVID. The low demand had led to very low oil prices. So a lot of the gas in the US, shale gas, comes out with shale oil. It's associated with the shale oil production. So even storage in the US was quite low in August in 21. And then beyond September, the market has been increasingly driven by sentiment around what is happening with Russian gas supplies, and as always in the winter, the weather as well in Europe. So you can see here that the prices not only got very high, but they moved a great deal at the slightest thing. So Putin announced that more Russian gas would be flowed to Europe and the prices dropped. Then it didn't arrive and the prices jumped back up again. Then the German regulator suspended the approval process for Nord Stream 2. That's a little technical. I'm assuming that few of you know what Nord Stream 2 is, but you'll know more about that as we go through. So the prices jumped up then. And then the Yamal pipeline, there was even less gas coming through Yamal, which is one of the pipelines that supplies Europe, which you'll see in the next slide. And prices really went through the roof for a while. But then more LNG came in, and then the weather got very mild just before the new year. And you can see the huge drop in prices just shows how temperamental and sensitive the gas market was. So I'm going to go through the sources of gas that come from Russia, as the Russia behavior seemed to be particularly important in driving prices. And on the map on the left, for those of you who like flags, I've put a few of those in, so I hope I've got them right. I've not included the flows to Turkey. There were a lot of gas flowed to Turkey in 21, and Turk Stream is a new pipeline, and that filled up quickly. But I'm going to look at the flows of Russian gas that go into the EU. So Yamal Europe has been one of the important lines in this discussion, and the flows that you see on the chart on your right are those flows which are coming across the border from Belarus into Poland here. And there, as you can see, it's a fairly steady supply of Russian gas normally, and then the last quarter of 2021, it dropped dramatically. The next very controversial location, Ukraine. Many pipelines, this is a simplification, many pipelines cross Ukraine carrying Russian gas. And if you looked further back in history, you'd see that much greater volumes of Russian gas used to cross Ukraine. More recently, the transit agreement between Russia and Ukraine has been renegotiated. And at the beginning of 2020, there was quite a dramatic drop in the amount of Russian gas that came across Ukraine. But this was expected. So that was to be expected. Although right at the beginning of the year, I think the negotiations were quite tight. Anyway, the flows across Ukraine have decreased dramatically, but not unexpectedly. Some gas does flow directly into Finland and into Estonia. And this small area here on top there includes the other gas that flows into Poland via Belarus, and that flows into Lithuania. So there's a small amount of gas that flows into all these countries up in the north there. And then the very much talked about Nord Stream. This is Nord Stream 1, the first pipeline. It follows the same route as the second pipeline, which has been completed and is ready to go, and is the same size. So in 2020, you can see that Nord Stream was the largest volume of Russian gas that came into the EU, and it was consistently used. There's no drop-off in Nord Stream volumes. And perhaps if you could imagine another Nord Stream 2, you can see that it would be able to replace nearly all of the gas in Yamal and Ukraine if you were to add another Nord Stream on top there. So those are the flows of gas. Now, partly the fall in demand is in 2020, there was a fall in demand because of COVID, and more LNG was being brought in. But most noticeable was the smaller flows to Yamal, which had Nord Stream 2 come on stream. You'd imagine that those volumes would be easy to replace by Nord Stream 2. And that flows directly from Russia to Germany, so no transit fees. Whereas if you're transiting Belarus or Poland to Germany, you're paying transit fees, and Ukraine too. So in total, the total picture is shown here over the last few years of Russian gas exports to the EU. And you can see that at the end of the last quarter of 21, there is a significantly lower amount of gas flowing, even compared to 2020, where gas was still recovering from the COVID, where demand was still recovering from the COVID outbreak. I had a look today, and well, in total, the flows during January were also very low, so the same picture would have continued. And there were the highest monthly imports of US LNG that there have ever been this January. On the first day of February, I thought everything was going to change before we came to the webinar today, because Russian flows increased. They increased across Ukraine, and they increased through Nord Stream to the max of their contracted capacity, and even a bit more through Yamal, I believe. And prices did take a step down. And there was some talk about contract prices and spot prices, and perhaps that European companies were actually ordering some more gas against their Gazprom contracts. But that didn't last very long. And the flows are down again, and the prices are back up again where they were. So prices are still looking at the forward market across 2022 at about 80 euros per megawatt hour. So they're still continuing to be high for the rest of the year in the forward markets. So that's a bit about what was going on in Europe and in Russia in particular. So I'm going back to the beginning now, and we're looking back at the whole of 2021 again, but this time I've put on some of the global prices, so you get a picture of what the global markets have looked like during this period. I'm assuming some of you may not know what all these letters are. Okay, so I'll go through them. TTF is the Dutch hub price, which is the benchmark gas price for Europe. Okay. Henry Hub, HH, that's the American price, gas price, the main American hub price. And if you look back here in January, this arrangement of prices is what they would more typically have been. And you would normally imagine that the European price here would sit somewhere between the Henry Hub price in the States and the JKM, which is the Japanese import price. So this is the LNG price to Asia, which has been oil indexed, still oil indexed, and generally speaking has been higher. Sometimes if the oil price come down very low, it would be similar to Europe. But generally, this is the arrangement here back in January that you'd expect between the global prices. It's worth noting perhaps, because one of the questions I was asked was about the Henry Hub price and could it reach $6 per MMBTU. I mean, it's currently $5.50 per MMBTU, so it could almost certainly reach $6. And in fact, before shale gas came onto the scene, around 2009, the prices were much closer to European prices. They were around the 7 mark level. The reason it's so much lower is because of shale gas, and shale gas that's come out associated with oil. And then noticeably, in February, there was a really nasty cold spike in the US, and prices went very high at Henry Hub, but this didn't affect European prices or global LNG prices. So that's quite interesting that they're not, the US is not linked, that's not having an effect on global prices. And then so what happened is the global market got really tight. The European price is being set by LNG, and the European price and the global LNG price converged, and then they both carried on going up with all those factors that I talked about at the beginning were happening and all the prices were rising gradually until September time came. By this time, the US is beginning to be taken up a bit. It's interesting that all this time the US prices stayed, low, but it's still coming up significantly if you're in the US. And so by September, the US is beginning to rise. And also around this stage, I think what happens is that what's happening in Russia with Russian flows and what's happening with European weather seems to be dragging up the whole of the global prices. So you can see this is a classic point here where Europe's come up, but the LNG price here hasn't come up quite so far. And then this is where Putin made that announcement and prices fell. And the global LNG prices are obviously affected by it, but they don't come down quite so low. And another question I got asked was about Brexit, I think, or it's about whether the UK being separated from Europe was any benefit. And I did put NBP here. I didn't mention that at the beginning there. NBP is actually the UK hub price. And that throughout this period has been slightly below the TTF, the European benchmark price, because we don't actually use Russian gas, hardly Russian. We've got some Russian LNG that might come in, but we don't use a lot of Russian gas, so we're not quite as sensitive to these announcements. And here's an example where the European price got really high. The LNG price does follow it. And in fact, the LNG follows it. So the LNG will follow into Europe at those high prices. So I've gone one too far there. So at these very high prices, the LNG has been drawn into Europe. And you can see here this mixed bag of flows of LNG over the last 4 years. And prices were low. So a lot of LNG was coming in 2019. So a lot more LNG has come in during October, during the last quarter of 21, but not that much more. We're still on average. We were on average over the year operating at about 50% utilisation of our LNG regasification terminals. So more could have come in had it been available and had it not been so expensive. And then obviously there's been much discussion about storage. And here we are pretty low in 2021 for storage, which again isn't surprising. Prices were rising all the time throughout the summer, so people weren't putting as much gas in storage, and then prices have been extremely high and volatile, so people are taking gas out of storage rather than buying gas if they have got the gas there. So storage levels are very low at the moment. I would say I had another question. I'll just attempt to answer the odd question that comes up. So another question I had was about the valuation of storage. Now that would need a whole webinar of its own, valuation of storage, but principally storage value is gathered from seasonality of price. So it's cheap in the summer when you put it in and you take it out at a profit in the winter. So the problem has been when you get prices that are very high, they then tend to, as they recover, and as the forward markets would show, they tend to come down gradually, and that destroys the seasonality between the summer and the winter. So you're losing the value to your storage facilities until that pattern is, the normal pattern reoccurs. And then there's a discussion about strategic storage, which maybe if you've got time, we'll touch on at the end, is whether as soon as you start keeping storage back for strategic purposes, it interferes with the value of all the other storage. And there can be an awful lot of discussion about how you manage strategic storage.
I was going to, Lucy, ask you just to move back a couple of slides to we had the chart of the gas inflows coming in from Russia.
That one.
No, the next one, the exports on the line chart. Yeah, that one. Because I think what's striking to me there is 2020, versus 2018, 2019. Of course, 2020 gas demand, as you said, was much lower, and then as we got into the winter, the exports started picking up. Because if you compare 2021 and 2020, you might look at it and say, well, there's not much difference year on year, but of course the conditions are very different in terms of where gas demand is, and there's no pickup in October, November, December in the gas exports that you've seen, in 2020 even, and certainly nothing like what we've seen in 2018 and 19. So I think it's the COVID year, of course, in the charts here can hide a little bit of what's been going on, I think.
Yeah, I resisted the urge to put in demand. I just felt there were enough lines to deal with. So I didn't put in demand. You could probably do some quite interesting comparisons with percentage of demand that was met or something. Shall I carry on that?
Yeah, please do.
So the commentary. So there are a lot of different things being said, which in the office here, we've got quite a few experts who are taking slightly different lines. There's much discussion about it. And we were all busy quoting our favourite commentator on this subject. So I picked up a few of these. So to look at what reasons were being suggested or have been suggested for these low Russian supplies. So one of them was that European companies are not ordering any Russian gas. And that was Putin who said that. German and French companies didn't ask for any gas. Now, this may well be the case because there'll be a way in a contract, there'll be a way that the price is constructed related to the hub price. So ahead of a month, it might be the M-1 price that sets the price for the next month. And you can imagine that in December, that M-1 price, if December for January, looking forward to January, would have been very high with those very high prices. So it might be that under sort of contractual terms, it was quite unattractive. Another thing that was said, that there was extremely cold weather in Russia, and they were just meeting their own requirements for gas. And there was this date that a lot of people talked about at the beginning of November, where the Russians have to have their storage filled up to a certain level. And that once that date came by, it would all be, the gas would start flowing, but it didn't. And Mike Fulwood of the Oxford Institute of Energy Studies helped me with this one. So he just pointed out that they'd filled all their storage in Russia, and by the 29th of December, only 12.6 BCM had been withdrawn, which was the lowest level of withdrawal since 2015. So they had very good stocks in storage at the end of, it was considerably higher than they had been at the end of 2020, at the end of 21. So I don't think it was cold weather that was stopping them supplying gas to Europe, if they kept all that gas in their own storage. And then there's the question of prices. And the fact that these Russian contracts, many of them are linked to the hub price. And so why would they deliver gas? This is another member of the Oxford Institute of Energy Studies. Gazprom is not going to dump volumes on the spot market because this would immediately affect its total portfolio. Blame the current rules of the game for what is happening, a classic market failure. So did the EU get more than it bargained for when it encouraged Gazprom to link all its prices to hub price? And obviously, there are geopolitical motives involved. I'm not going to touch too much on Ukraine because that obviously sort of blows everything out of the water a bit. If there's an invasion, that would change the picture considerably. But certainly on a slightly smaller geopolitical motive, they would very much, Gazprom would very much like, they've built Nord Stream 2, it's complete, it's full of gas, it can flow, and they would very much like that to be approved as soon as possible. And various people, including the head of the IEA, have said that Russia could flow gas if they wish to, and it is just the geopolitical tensions that are stopping them from flowing it. Another thing I've heard people say is that Gazprom has undisclosed problems with its gas production or transmission. They've got loads of enormous gas fields and many lengths, miles, thousands of miles of transmission pipelines. So are there problems upstream with that? But Alexei Miller, who's the CEO of Gazprom, was very proud that 2021 was the best result they've had in 13 years in terms of production, and very good for exports outside of the former Soviet Union as well, more than 2020. So I don't think it can be that they've got any upstream production issues. I've also heard it said that Russia is turning its attention to China and it will be selling its gas, and there in preference to Europe. And they have indeed started a new pipeline started up in 2021, which is the Power of Siberia pipeline, and it has been flowing more than it was contracted to flow last year. However, I did a map. I couldn't resist doing a map for this one. So just to explain the difference, this is quite useful to see anyway, because you get to see the largest gas fields in Russia. So Russia's an enormous country, and it has a great deal of natural gas reserves. And you can see where they all clustered. The biggest ones are all clustered over there, and all the transmission lines head to Europe. So this enormous amount of gas they have, it is connected to Europe as its biggest market, its biggest export market. And the ones to China that are supplying China, they're large fields, but they're completely distant from the ones in the fields that are supplying Europe. And this Power of Siberia pipeline is connected just to those two. So currently no pipelines cross this very large area. So there is no interaction between the volumes that are supplying China and the volumes that are supplying Europe at the moment. There is a proposed Power of Siberia 2, which potentially could cross here, but it's a very long distance. And as they're producing LNG here up in the north and are able to put it on ships, it would be debatable as to whether it's worth building a very long pipeline or putting it onto ships. And there's more that goes along with that statement, because you could, that it can be frozen up here in the Arctic, but less so these days, it seems, with global warming. That would stop the ships, so it might encourage you to have a pipeline rather than an LNG tanker. So, in summary, some of the reasons that are being suggested for the low Russian supplies can be discounted, okay? So, and some can't. So I couldn't tell you either way the details. It seemed on the 1st of February that some companies did order up some Russian gas. It's not because there's extremely cold weather in Russia. And it could be, and the Gazprom is prolonging the prices for possible financial gain. I think we all agree there are geopolitical motives going on, especially regarding Nord Stream 2. But it doesn't seem to be because they've got any upstream problems, and it isn't because they're sending all our gas to China either. So the remaining reasons for the low Russian supplies fall into two categories: politics and money. So I've distributed them like this. And there are a few things associated with the politics, not the great big politics that is whether Russia invades Ukraine, which obviously just blows everything out of the water. But apparently the Russian government is considering a request from Rosneft, which is the Russian oil company. Currently, Gazprom has a complete monopoly on all exports from Russia. So anything that would flow through Nord Stream 2 would have been just Gazprom. But if there was a potential change that allowed another company to export through Nord Stream 2, it would be something that the Commission would approve of, some competition in Nord Stream 2. And then regarding the money and the prolonging of the high prices, this has raised lots of questions in people's minds about hub prices. Do you want to have a gas supplier who is able to control the hub prices in which their contract price is set? Is that just, it might just be a unique period of time where the global market is so tight that's allowed this to happen. Some people have called out for oil index contracts again, because previously gas price had followed oil price around quite a bit. China, out of interest, when I was looking into this, has a number of contracts that are linked to the Henry Hub price, because you could sign a contract that was the Henry Hub price plus the cost of liquefaction and transportation plus extra. So that would be, as you can imagine from those charts, that would be a very good contract to have at the moment if you were linked to Henry Hub, depending on what the P0 price was in the formula, obviously. But all this is only okay if Russian behaviour doesn't completely kill European demand for Russian gas, because Russian gas does depend upon the money it gets from selling gas to Europe. So they won't want to mess around with the markets too much.
Can I ask another question?
Go on, of course you can.
Excellent, thank you. Just, we've excluded the production and transmission option because of what Gazprom themselves have said. And I'm just wondering, because we've had a few questions come in, and one of them was from David Tong. Hi, David. Do you think Gazprom has supply problems? Supplies to Turkey came down in line with the fall in Europe in the autumn. And I know, Alexei Miller here has said that they produced, the most ever. Is it possible that there could be some undisclosed transmission pipe issue on the way to, say, the Yamal, or on the way, in general to Europe that we just don't know about and Gazprom don't want to talk about? Could that be something?
Well, it could be. We don't know very much about the condition of their pipelines, and they cover enormous distances, so it is possible. You could try looking at a market like Turkey and seeing if volumes came down to Turkey at the same time, but it would use the pipelines that lead to Turkey are very different pipelines. So if it was a transmission problem, it wouldn't be the same transmission problem that you'd get through the other routes to Europe. It's possible. It might be if their LNG supply picks up, that some of the gas that might have gone through those pipelines would be diverted to LNG. It's not transparent, the condition of the Russian transmission system.
And could be that at some point there was a lack of investment in the past. I suppose that's a possibility. Another question here from Francisco Lavron. Hi, Francisco. And that was about Gazprom filling their European storages at the beginning of spring, and how they didn't fill as in previous years, but it wasn't picked up. I think back in the autumn we were looking at the difference between the storage that Gazprom owns. I think they own through a subsidiary the largest gas storage facility that's in Germany. It's the largest one in Western Europe anyway. And there was a question mark, I think, about whether those were being filled up as quickly as in the past. So I note that Gazprom anyway has subsidiaries in most European markets in various areas operating. But I think I think we had a lack of visibility of the storages, if I remember right, Lucy.
Yeah, I think, yes, it could be tricky. It might be possible to find out which storages were filling and which were owned by Gazprom and what capacity was filled. And it might be possible to do analysis of how that had happened in other years. I think we're in agreement that they haven't, one of the reasons storage in Europe isn't full, is at a particularly low level, is because those capacities that are owned by Gazprom have not been filled. So that might be a question for the European Union as to who can own the storage. Even if you don't go as far as strategic storage, you might like to look at the ownership of the storage in Europe.
And someone has pointed out that that we should mention that I think it's been in the news quite a bit. Russia's fulfilled all of its long-term contracts. It's not that it's not fulfilling its contractual obligations, as we understand.
To the bare minimum.
Yeah.
They've fulfilled their contractual obligations to the bare minimum. It's nothing like the sort of flexibility that they would normally provide.
Yeah, but they are fulfilling them. I mean, minimums are minimums in contracts, and you fulfill to the minimum if you
I
want
think this comes to maybe I should say money in contracts in this Venn diagram, because I think you might want to be careful how you word your contracts in future.
Well,
regarding
the counterparty to put in
enough seasonal swing.
Counterparty could put in different, argue for different terms, couldn't they? It's up to the counterparty to do that.
I mean,
so
questions for me?
Yeah, and then just from someone saying that the relationship between LNG and pipelines, how much can one replace the other?
I'll come to that.
Yeah. Okay. So you'll come on to that. I think, yeah, with that, why don't you move on? Because one of the questions here is about the global picture, which I think is next.
Good. Well, let's go on then, because we're not quite at the global picture yet, but we're leading our way to it. So this is an extract from AFRY's global gas report, okay, and European in particular. It focuses on Europe and looks globally, and all the different supplies to Europe. So European gas demand is going to fall under decarbonisation. So this is what you're seeing out to 2060. You're seeing a fall from current, well, ever such a small increase, and then a fall from current levels down to 2060. Now, some of you may be crying out that how can we still be using that much gas, a fossil fuel, in 2060? I just wanted to say that it's being used on the assumption that there is some carbon capture, storage and utilisation in place by then, and also there'll be some blue hydrogen produced where the carbon is captured and stored. So a lot of this gas that's being used is decarbonised to a certain degree. But that's, by the way, the fall in gas demand. But what's significant about this is this green area here, which is showing that Russian gas is projected to remain, quarter to one third of gas sources to Europe for a very long time to come. And then you've got the LNG, which does rise up to equal that of Russian gas, but not overtake it. And you still need both of them going forward. And this dark blue is the indigenous supplies in Europe falling. And then one of the questions that I've got was about biomethane. And it's true to say that biomethane and any green hydrogen that you might mix into the gas grid to decarbonise gas will certainly be very valuable. And I imagine its development will go up. But this small section here is the current pledges of governments for biomethane. So it's not in any way going to be able to replace fossil gas. Hopefully a lot more biomethane could be produced if you really maximise all your food waste and all the different feedstocks you could for biomethane. But it's not going to really rival fossil gas. And now globally, the global picture, I had a few questions about this, just reading my questions. So yeah, I won't answer all of them here. There's another question. Yeah, so really, there's a question about how gas-fired generation is going to replace coal-fired generation. What impact is that going to have? And by far the most significant impact of that is what's going to happen in China. So we have a global energy demand model. And back in 2020, this dashed line here was the projected coal demand. Okay, and that was whilst China carried on as it was. During 21, China pledged to net zero by 2060 and to have zero coal demand by 2060. So the picture for coal demand globally changed dramatically. This black area here with China using a lot less coal. This is our projection. So the projection changed dramatically. We model, the reason this came about is, well, partly because we need to know global demand for coal, gas and oil for all our price modeling. But we also model now the Chinese electricity markets. And when you model the Chinese electricity markets, they needed to have Chinese gas market prices. So we did a lot more work on looking at the Chinese gas demand. And then this feeds into what is our global gas demand here. So down here at the bottom, you can see Europe and how much that gas demand is falling. Okay, and then in the US, that came down, the projection for the US came down during 21 when Biden was elected. So that this came down, the amount of gas you expect the US to use. But meanwhile, the Chinese demand for gas is projected to rise, not quite as dramatically as it's fallen, as the fall in coal demand, but it is projected to rise, and that more than makes up for the falls in Europe and the US. So any falls you're seeing in gas demand in more developed, in countries like in Europe and the US, is more than made up for by China, and there are some other countries that are growing, India, and other Southern Asian countries, more than make up for that. So that's the demand side of the formula. Then looking back to the supply side and what might improve matters there is the second wave of LNG. We call it the second wave. It's really one continuous wave of LNG from the US, and where we are now. So we've got an operating capacity at over 100 BCM at the moment, another 50 under construction. And new capacity approved is, up to 270 BCM, but not all of that's under construction. So this is AFRY's projection from our central projection, where the solid blue is what's actually been contracted from the US. And then the other bit is the bit that we think will come on anyway and be built. So we will get up by 2025 to over 200 BCM of US LNG, which will be enough to start changing that supply demand balance.
And it's worth to say the the numbers there with the modelling of the Henry Hub that the team in the US in New York and Houston are doing is leading to these numbers, both covering the power markets obviously, but also covering the gas market itself in the analysis we're doing. So
Europe's a great place to live if you're working with a team in the US and a team in Beijing, because you're the most reasonably timed of two of them. The US have to keep getting up very early, and those in Beijing have to keep staying up very late. But we do have quite a lot of interaction with both offices when we're doing our global modelling, and more increasingly in the US, where lots of interesting things are happening with decarbonisation, especially around New York and in California. So it's very interesting, and more and more I find myself needing to speak to them to answer some of the questions I get asked, because it is coming down to details about these liquefaction and perhaps in future about methane as well.
Yeah, and local power markets becoming more and more dependent on what's happening across the world because of global LNG markets and their impact over time. So I think it's a global and a local understanding one needs these days.
But what if Europe had to replace Russian gas much sooner? I don't know how much sooner. I watch the news anxiously, wondering what's going to happen. So here I have a big bar of the Russian gas. That was what was supplied in 2019. Oh, I missed out 2020 because of the low demand. So that was what was supplied to EU and the UK in 2019. Now I talked about the LNG regasification terminals, and if you were they've been operating at a rough 50%. So if you increase that utilization from 50% to 80%, now I haven't gone up to 100%, because any of you who operate LNG terminals will understand that you can't really have 100% utilization because of the scheduling of the ship. So 80% is a pretty impressive utilization. So were we to manage to get all our regas terminals operating 80% instead of 50%, then that would add potentially another 60 BCM. Okay. So, but having said that, you have to actually get the LNG there. And there's been talk in the papers about the US talking to Qatar to get us more gas. So, but as far as I know, as far as everyone's aware, they've maxed out with contracts, and many to the Far East, and they don't actually plan to increase their production before 2025. So how you'd actually get all that LNG to all our terminals in order to regasify it. Were you able to get hold of enough LNG, then there are planned expansions at various terminals around Europe, which perhaps you could bring forward if you're in a real hurry to bring in more LNG. And there are a couple of decommissioned terminals in Spain and up at Teesside, where there's a jetty. You could start bringing floating liquefaction regasification terminal. So there are options for more LNG regas, but the big problem there would be actually getting the LNG to them. I also then increased all our pipeline gas by 10% to add that to the mix. But even given all that, you're left with an unmet demand of about 70 BCM. And the options to replace that gas demand, if Russia wasn't to supply us with any gas, you burn more coal. That's not going to be very popular, even allowed, I think, under some of the rules. stop people retiring nuclear plant. And then other than that, it's really demand destruction and what happens to the gas demand.
And I think this is for me, the sort of kicker slide in the presentation of the webinar is just thinking about, what's in the news and the ideas around contingencies that the EU has planned, the US getting involved, what the options are, and the options don't look terribly good, I would say. It's worth saying that the gas that's currently in storage could help for a while. I think that's right, Lucy. It could help for several months, but then of course we'd be in a situation where we had no gas in storage either, and who knows what the situation would be come the summer or going into next winter. So I think you could defer a problem for a little bit of time with the gas that's in store, but you certainly still got an issue if the situation is not resolved over that period. So
yeah, I think you wouldn't be able to. It wouldn't be for very long that you could solve the problem. If I did put the last little point there was 35 BCM of gas crossed Ukraine in 2020. So if it was only the gas that was crossing Ukraine that was cut off, then that's a more manageable volume. I'm still not convinced you'd be able to find enough LNG suppliers to supply it, and it would make for a very tight market. But it is a much more manageable volume if it's only the volumes via Ukraine that you're concerning yourself with. So, Matt, I'll leave you to the implications.
Yeah, well, maybe before we cover those, we have a quick look at some of the other questions.
There are a few more questions, aren't there?
Yeah, let's have a quick.
I had a few questions. Shall I just touch on the ones I had a raft of questions about prices, about price setting, long run marginal costs. When is this all going to end? Is it going to be 6 months, 24 months? And yes, will it be as soon as spring comes and the weather gets warmer? Well, I would say that the long run marginal cost hasn't been very relevant for the last 4 months, because sentiment has been such. You saw from those enormous swings in prices that sentiment was everything. And what this has been is really a voyage of discovery of what the cost of cutting off demand is, and what countries are prepared to pay for gas, and what alternatives there are to gas. So if the nuclear goes down in South Korea, they haven't got any alternatives. And if there is no hydro in Brazil, they haven't got any alternatives to gas. So around the world, it's been necessary to use gas. So it's really this has been a discovery of where industry is turned off. At what price does industry start turning off? So we've now got some data on what that is, because we've seen industry turn off in the UK. And how much governments are prepared to protect their industry and pay for the cost of that gas if they really need it. So this is all lessons that can be learned through this. And at the moment, with our price projections, we are looking forward using, over the next couple of years, 2 or 3 years, we're looking forward using the forward curve to represent the sentiment that there is in the market, because you can't really model sentiment. And then as we go forward, we imagine that it will rebalance with that US LNG coming on, and you will rebalance towards the cost of producing it. But we will be looking at what the cost of demand destruction is.
And I think
questions, Matt?
Yeah, in a very tight market, then understanding what price people are willing to pay for their gas. I mean, obviously that's where the price is what's going to clear supply and demand. But I don't think that's very easy to see, without a sustained period, and certainly it'll be different for different industries and for different players. Yeah, just a question here. Hi, Paul Hallis. Since the Chinese coal fleet, a lot of it's pretty modern, why not fit CCUS and use coal instead of gas? I should imagine we've got a mix, Lucy. I'd need to double check, but I should imagine we've got some increase in gas. We've got a big decrease in coal, of course, So actually, it looks like from that chart that we actually got out of coal by 2060, and we've got an increase in gas and a major shift to renewables. I mean, my understanding of the Chinese situation is that that major shift to renewables is what's going to be driving most of it. But I think maybe, Paul, you're right. Perhaps we should look at that and see if there could be an alternative there.
We do look at CCS for coal. I don't think it's in Europe though, and in China they just need so much energy. They need all the renewables that they can get and all the gas with CCS that they can get.
Yeah, well, we could have coal with CCS instead. I will talk to my colleague in Beijing and see what.
There'll be a reason for it. I think they said I think China's pledge was that they'd be out of coal by 2060.
Yeah, well, it's a lot of coal mining jobs. We know what happened in Europe on that front. If there's an alternative, perhaps, and especially if the gas market is displaying tightness. So let's see on that one. Anything else here? I think we have covered that off. Francisco, I think asking, could the gas price crisis affect Russian reputation as a reliable supplier? And it's true that throughout the Cold War, Russia has been a reliable supplier of gas throughout ups and downs and political, a lot of political situations. It's continued to be a reliable supplier, and so this feels to me like a bit of a departure from what we've seen over the last 50 years. And I should imagine not without good reason, but I still think we're a little bit unclear on precisely what's in the mind of Mr. Putin. I think implications here, if we just touch upon them quickly, you can read them, but I think what we can surmise is that Europe, in most views of the future, is going to be needing Russian gas for some time to come, and Russia will need Europe as a market for its pipeline gas for some time to come. So I don't think it will change that relationship in any meaningful way. I do think it may lead to a quicker shift out of natural gas in Europe as a result of what's gone on. So it might sharpen people's minds a little bit on that one. Demand destruction, some industries have been shuttered by the high gas prices. Question if this continues long term, what does it mean for a lot of heavy industry, and where would they go? And looking at if it was gas industry, an industry that was a heavy user of gas, then looking at the charts that Lucy had earlier, I'd probably think about the US for the time being anyway. There's another question there. With such a big differential between Henry Hub prices and LNG export, if you were to net back those high LNG prices back to the US, is there an option? I don't know, but is there an option for building more gas pipeline in the US to get some of the, more gas out via export? And could you see gradually a equalization of prices within the US itself? And what would that mean? Or would that be stopped? Lots of LNG regas. I suppose that comes back onto the agenda in lots of places. People who perhaps weren't so keen or were holding off on their investments might sharpen the mind there. End-use energy efficiency. We talk a lot about digitalization, about the improvements in digitalization, and I'm sure that will make a big difference in lots of ways. But some of it, in some countries like the UK, where we're sat, and I'm sat in a rather cold house at the moment, basics like insulation are what's needed, not so much digitalization, I would say. So some places we just need to get the basics right. We haven't managed, but that could help, and obviously energy efficiency can really make a big contribution here. Shale gas, could it come back on the political agenda? Why not? I've seen that in the news in the UK. We could have been self-sufficient if only we'd have got on with it, etc. UK, perhaps Poland, depending on how things move there. Biomethane, as Lucy said, maybe not a huge contribution. I have seen some much bigger figures coming out of some of the associations, but certainly those projects could be looking, some of them could be looking better financially. Then we got the green hydrogen, blue hydrogen. For me, the question there is hydrogen really going to be pushed into heating in Europe, and how much, and how does that develop? So I think there's in terms of respect to Russian gas anyway, and what gas we need, I think there's an important consideration there. Nuclear retire rules, new developments. At AFRY we have a couple of big nuclear teams in the UK, in Sweden, in Finland, and elsewhere as well. And I'm sure they're very positive about SMRs, about small modular reactors, and how things could be done differently in the future. And maybe this gives a little bit of a fillip for that. I think carbon prices, of course, have been very high, in part because of this. But we think even if gas prices fall back, carbon prices is going to stay strong into the future now. So we don't see it, we're not looking at a carbon price going back down to low levels at all. I think with that, I have covered off everything I was going to cover on there. Anything, Lucy? That,
well, I've got on here, I think Matt mentioned this at the beginning, the Fueling the Transition podcast that we do.
Yeah.
There's a link to that.
Yeah, and I'll just, while you have that up, I'll just have a look.
I don't think any other questions. We can contact you
indeed
individually afterwards. I think we've covered quite a few questions, I hope.
Yeah, and I'll have a look. The presentation, as we said at the start, you might have missed it. Presentation will be up on the website and will be sent to all people who have participated. So you'll get a copy of the PowerPoint, and the webinar itself will be recorded and uploaded with all the others. And we're going to carry on looking at this one. Very interested to hear people's views actually on how you think it's going to pan out, and what developments we may see in the future. I think we're, in some regards, there's still quite a bit of uncertainty about the Russian situation feeding in. And of course, we all hope that we can resolve the tensions around Ukraine amicably and without any issue or any problem. And here we're just looking really at what are the some of the consequences one could see. So with that, I'll say thank you very much for joining. Thank you very much, Lucy. Well done.
Thank you for listening to me for that long. And do get in contact if you have any further questions.
Yeah, please do. We'd like to hear from you. Thanks very much. Have a lovely day.